All right, on your marks, get set.
Good morning, everybody.
All right, here we go. Hello, everybody. Welcome again to Price Links. My name is Phil Flynn, Senior Market Analyst at the Price Futures Group, as well as a Fox Business Network contributor. Big Fed decision, the biggest ever. And when we have a Fed meeting, we bring the guy that has correctly predicted the Fed's move, I think, for the last 2 years, and that's Todd Horwitz. Bub, Average Joe Trader. Good to have you back here.
Phil, it's great to be on with you.
Todd, you keep telling us the Fed can't raise rates, they can't raise rates, they won't raise rates. Fed Fund Futures this time is saying there's almost a 76% chance that they're going to raise rates. Who's going to be right? You've been right last time. The Fed Fund Futures have been wrong. You've been right. Are they wrong again?
They're wrong again, Phil.
Why are they wrong again? Everybody says that they're going to raise rates.
The whole world says they're going to raise rates.
Right.
But we have the Fed, the incompetent, led by the ignorant right now.
Right, exactly. Okay.
And
But do you blame the Fed or do you blame the administration?
first, I blame the Fed. They had the decision. They're the ones that are pulling the purse strings. They can raise rates. Okay. Now maybe they're getting pressure. Maybe there's some political pressure.
Right.
But Janet Yellen has the ability to raise rates if she chooses.
But you keep telling them that they won't. And why
They're
won't
not
they?
going to because they're afraid. We saw what happened with Draghi last week at the ECB meeting. He came out on Thursday and said, well, maybe we're going to cut down a little bit on easing. Maybe we're not going to do this. And all of a sudden the markets collapsed.
Well, they did. But, you know, if
And
you
then
look
Friday,
at the one up into those numbers, I mean, if you look at where the dollar was, you look at where the euro was, I mean, they were predicting what they did. And this is typical Mario, though. Mario gets them all geared up. You know, we're going to do whatever it takes to save the euro. We're going to do whatever it takes to create inflation. He overpromises and underdelivers. That's his mantra.
Didn't he come out on Friday and change his mind? Of course he did.
Well, he did, but he always does that.
But look what happened. Market was down 300. It was up 300.
Right, exactly.
Because you have, unfortunately, true price discovery.
But he can move the market. Why do anything if the markets do what you want? He's like the Pied Piper of the ECB.
Well, that's the key. That's the problem, and why I don't think they're going to raise rates right now.
Okay.
We have a market that does not have true price discovery anymore. Remember, price discovery is the real way that markets actually establish what the right rate. Okay.
Right.
They're not working that way right now because we've got the Fed manipulating it.
Right.
Because if the traders or if the investors throw a taper tantrum, what happens? The Fed backs down and says, okay, let's let the market go up. The market going up has been no improvement to the overall general economy. The middle class remains in a recession. Without doubt, there is no problem. Now, we just had a jobs number of 211,000 jobs.
Small business confidence came out. It was terrible.
But nobody mentioned that there was 50,000 people laid off. 25,000 were from Schlumberger, and I guarantee you the 50,000 that were laid off make more than the 211,000 that just got hired.
So what's the market reaction going to be if the Fed, you know, reneges on this interest rate increase, which has basically been promised? Are we going to see a major meltdown? Because the market seemed to like the fact that they were going to raise rates.
I think the fact is that the markets, the Fed funds you mentioned, priced in a raise. The dollar had priced in a raise because the banks are major short the U.S. dollar right now.
Right.
Why? Because they know that everything's been kind of priced in. If the Fed does not raise rates, the market has a greater chance to collapse off of that information than it does now of a rate increase. Because now, if Janet Yellen backs off again for the 7th month in a row, it says to the market, we got more problems than we think about. And that would be, to me, more devastating to a market. But the overall is, I don't think they have the guts. I don't think they have the backbone. And I think that they're too worried about Wall Street and the day-to-day trading, which is none of their business. But that's what they're worried about. And they don't want the markets to find true price discovery on their own. Because if we were, interest rates should be at 2 or 3%. Because this hasn't helped us. It's shut out small business. It's shut out everybody because we've let the rich get richer and screw the middle class.
Well, Todd is always out for the average Joe. Bub, great. Thanks for being here. And thanks, everyone, for Price Links. You rocked it, baby. You rocked